Good morning, guys. How are you doing? Welcome back to the Everyday Growth Advisors webinar series, the growth webinar. I hope you guys are having a great morning here. Welcome into the live stream. Okay, who's ready for another webinar? Today's webinar, we're going to cover how do you set up a position trade. Now, a position trade by definition is a long-term position, okay, which means to say you're looking at this as a long-term investment, something for a year or more. And right before I get into that, I want to do a little pre-market rundown. That's one of the benefits of turning up for these webinars. You get like a little rundown of the market, and then we get into the lesson, probably 5 minutes. Just a little couple of things. In case you guys don't follow me on Twitter, this morning I posted a couple of things that I'm looking at. And congratulations to those who followed Netflix yesterday. That was a big win. And remember not to take those gains and put into something completely different. Now, I want to bring your attention to something that I did yesterday that I want to kind of explain here, because I had a lot of questions being asked about it, and etc. And so at the start of the day, when we saw Netflix run up, we didn't expect Netflix to run up that much, but we held the position. I'm still holding the 5-10 calls overnight. And the reason why I'm holding those 5-10 calls is because right at the top over here, what I did in order to take advantage of a pullback is I sold some 550 calls here. I'm talking about weekly calls that expire tomorrow, okay? And the premium that I received for these calls were about $1,000. Now, the only reason I did this was because the premium was irresistible. I turned my long call into a spread by selling a call on the top, so it became a vertical spread. Okay. Now, I personally think that this strategy works best in a situation like this. It is obviously a one-off situation where the stock ran up so much. It needs to come down today, and so it needs to make a corrective wave. Now, the whole market is overheated, right? So expect some kind of a pullback. Now, if the pullback happens, what happens to my sold call? My sold call is going to generate me additional returns just by holding it. Now, the reason why I sold this call was because there were a couple of things. Okay, first things first, the premium was $1,000. Number two, the theta on that call was $2.70 versus the theta that I got for the 510 call, which was 0.8 something. Okay. So therefore, just by holding the spread overnight, I'm guaranteed a net credit, because the theta here, which is a debit, is going to offset the theta that I received from the sold call that I have. So just by holding the contract overnight, I received $2.70 minus 80 cents times 100 shares. Okay, and then the third thing was that it was meant to pull back, right? So now at the market open today, what will happen is, yes, even though my 510 call is going to lose a little bit of money, which is exactly 6 deltas worth, and whatever IV else, but the thing about it is it's not going to lose a lot of value. Why? Because my calls are in the money. They're deep in the money. They are very deep in the money contracts, right? But what's going to happen to the guy who bought my 550 calls when the stock price remains around 540 today? Well, what's going to happen is that theta is going to be burning him throughout the day, right? Option traders will start to price it in, and as long as I don't get close to 550, I'm good, right? So I get an additional $1,000 from this trade, just plus the theta overnight, just for holding that sold call. So sometimes it's not about just buying options, it's about selling options as well, and you got to know how to get those things done. Whoa, thank you, Jonathan. I appreciate it, man. Damn, $10 donation, appreciate it. Thank you. Those Netflix calls. Thanks, appreciate it. Okay, cool. Now, so I just wanted to illustrate that fact. Let me know, if you like more breakdowns like this, I can do more of them with more complicated strategies, things that maybe explain it, break it down for you guys in a more bite-sized manner. Definitely can do that. Remember, if you want to like master these concepts, how do you sell calls, sell puts, blah blah blah, we have the intermediate course coming up on 9/12. Okay, September 12th, that's the date. Save it. We have the beginner course, which will sign up on Saturday in case you don't know. So this Saturday 29th at 12 p.m. Eastern time, we have the beginner course coming out. I just made a post about this earlier today. So make sure that you have a look at it. Learn, compound, grow, which is the EGA motto. Take control of your trading situation now. Take the mentorship course. Okay, it's gonna definitely help you out. Highly recommend it. 5-day course, 3-hour live session, and 2 live trading sessions with me, which one of them will happen today. Okay, and if you're interested in a live trading session, hit me up. Today I'm going to be holding one. I don't mind letting more people in. If you want to see how the live trading sessions go, I can almost guarantee it that by attending the live trading sessions, sometimes we catch some plays that are awesome, and majority of my mentees have made back the course fees just from trading with me. So I mean, I think it's a no-brainer, right? And here's the curriculum. If you were interested, go on my Instagram, you'll see it. And so make sure you sign up on Saturday if you want to attend this wave. Highly recommend it if you haven't. Okay, cool. Okay, remember today we don't do no tickers, Thomas. I'm sorry, but we don't do tickers on days like these. But I appreciate you coming here though and putting a ticker there. Okay, really quickly here, market update. So what I do see here, a couple of things as I post on my Twitter. Okay, first thing I see, Boeing, right, has been consolidating above this little Fibonacci retracement here at the 0.236. I really want to aim for this to go up here. It might happen since we have been making, this kind of a formation. Now, obviously, it could go either way. What we really want to see is this and then make another wave up, right? That will be your bullish confirmation here. But I'm comfortable with taking a risk here because the risk to reward outcome is nice. If Boeing drops below 165, I cut. If Boeing rips up to 187, that's a 1:2 risk to reward ratio. I like the odds of this trade. Therefore, I am in. Okay. So taking that on the premise of that, and also remember what has been happening for the past few weeks. Okay. Every time tech sells off, where does the money go into? It goes into Dow Jones. Okay. This has been happening increasingly the past few weeks. So the last time tech sold off, we had kind of a little mini sell-off, then Dow Jones ripped. So I'm anticipating a similar thing this time. People want to go for where the returns are. So keep your eyes on Boeing. This is the one to watch today, especially since there was some news about the flight tests for the 737 MAX happening yesterday. Okay, could pop. Another one I'm watching is Fastly here, consolidating nicely after a golden cross, right? On the 1-hour chart, that's a strong signal usually. And we'll see because there's a nice little gap to fill over here. You can see this gap. So I will only take it if we break above 93, 50-ish with good volume and momentum. That's when I'll play Fastly. I will not play it otherwise. Wait for the confirmation and then get in. Twitter also nicely consolidating above the breakout here. So this may be another runner as well. Nicely bullish pattern here. Moving averages are still scalping. Looks like a pretty solid trade. So keep your eyes on this one if market momentum keeps up. And then the Dow Jones Industrial Average. This is nicely consolidating above resistance here, ready for a move up. So let's see if we can actually make that move up. And XLI would be the play here. Nice little bullish breakout out of this ascending triangle. A nice breakout. consolidation, a validation of a support here, and now looking to make higher highs. I like $80 calls for about 50 to 80 days out, which is what I intend to take if I get volume and momentum going in here. Okay, so these are a couple of things I'm watching for today. Definitely keep your eyes on them. Alrighty. How do you create indicators to read charts? I've heard you can sell calls even without owning the stock when you have a long position. Is this true? Yes, that's called a naked call, but you would have to use a cash collateral, which is risky. For this specific case, Tanya, I already had a Netflix 510 call, right? I had a Netflix 510 call. So my 510 call, the bought call, which is the long call, this acts as a collateral. Because if my 510 call expires in the money, then what happens? My shares, I'm basically have to sell 100 shares. So where do those 100 shares come from? They come from this call, which is the right to buy 100 shares. So you have the right to buy 100 shares here, you buy the 100 shares, and then that sold call drops away with this trade. It's like a neutralizing pair, okay? All right, cool, let's get it done. Yes, I have leaps in Boeing. I have a considerable big position in Boeing, so okay, cool. Let's get into the webinar real quick. I want to show you guys what are the strategies that I use to build a long-term position, okay, which is also called a position trade. Okay, now specifically, I have mentioned this on the live stream before. What I really like doing is seeing what are the sectors that are underperforming during the time of the market. Finviz gives you a good kind of a grid here. If you go to Finviz, you click on the heat map, and you go to 1 year performance, you can see automatically what are the ones that are really struggling, right? Energy, you can see some aerospace and defense. Boeing's down 50%, right? Nothing is down worse than Boeing right now, right? Boeing is the worst, right? 50%, right? I don't know, maybe there are some others, but Boeing is one of the worst, okay? Let's see here, 30, 30, 30. There's one here, FANG, F-A-N-G, whatever that is, 57%. Oxy, Occidental Petroleum, that's 69%. Those are all oil-based stocks, right? MRO, oil-based stocks. XOM 40%, CVX, Chevron. Boeing is leading the pack in industrials, right? The rest of them not so bad, okay? Then here you have airlines as well, right? So how do you build a position? Well, the first thing you look for is a beaten down sector, okay? You look for a beaten down sector, like for example, financials, banks, blah, 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 right? And let's say you choose industrials. And for this example today, I want to use Boeing as an example because it fits the bill of a position trade, okay, which is exactly what I'm in, right? I have leap contracts in Boeing. I have a position in Boeing, a long-term position in Boeing, because I believe in the company. I believe in the management. I believe in the fact that they will survive in the long run. I like the market positioning. They have, a good chance to rebound. And I trust the business. It's a company that can't fail, okay? It can't fail. There are only 2 companies in the world that produce airplanes, Airbus and Boeing, and not one of them come close to the production capabilities of Boeing, okay, in terms of commercial airplanes, okay? So for this case, we will observe Boeing, okay? And so for Boeing, we know, all right, this company is down 50%, and so you can take your pick though. It can be anything else, right? It could be one of these, it could be CCL, it could be Expedia, it could be NCLH, whatever, right? Basically, you need to pick a company that has a high chance of a rebound, okay? Why? Because this company has to eventually come back, right? This stock is down 50%. Remember, where was Boeing trading at before COVID? Okay, look at this real quick. This was trading at almost $400 or more. Oops, wrong color. $400 or more, guys. Okay, this range, 360 to 400. And now it's kind of like consolidating, doing its thing, blah, 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 right? Okay, so you have to first of all figure out which is the beaten down sector, and then figure out whether this sector is a good sector to invest in, okay? So the question you need to ask yourself is, will the airline and travel sector rebound? Well, that's a pretty no-brainer answer, right? Chances are that it will, right? Chances are that it will eventually, right? But you need to take it from an approach that, okay, so since I know this will rebound, how do I play this? Okay, well, a lot of people ask me, why did you pick a $300 strike? Okay, well, I don't pick the $300 strike because I specifically want Boeing to go to $300. What I see is that is the major support level that was before Boeing had its big fall here. Okay, this was the last line of defense. You can see it right here, right? There's a very high chance that, you know, sometime by next year we could at least come back to this level, right? At least to this level, at the 300 mark. There's a high chance, but I'm not banking on it. What I only care about is buying these because as a leap, the theta on these contracts are so negligible that if Boeing were to make an aggressive move up, these out the money contracts would be the first to be snapped up by traders who are feeling bullish on Boeing, okay? And then what more, these out the money contracts will hold the most extrinsic value. Extrinsic value means potential value, okay? In terms of a long-term trade. Remember that options contracts have two types of value. They have an extrinsic value and a intrinsic value. When a contract is out the money, it has the maximum extrinsic value. When a contract is in the money, it has no intrinsic value and maximum intrinsic value. Sorry, no extrinsic value and maximum intrinsic value. Okay, so when you take a out the money contract for a leap, what you're doing is betting on extrinsic value, and that is exactly what I'm doing with my leaps. Okay, if Boeing moves even remotely close to $240, traders will be anticipating for it to rebound to 300, 280, 260, wherever above this level. That's where the extrinsic play comes in, and you can make a pretty penny with a IV rush. That is the reason why I like to play out the money here, by risking a little less and having a great risk to reward ratio. Okay, so obviously the first step of doing a position trade is to figure out what is the intrinsic value of this stock. And so you have to go figure that part out. Okay, you have the intrinsic value calculator. You've seen a couple of methods of me doing these valuations. I think by now you should be able to handle intrinsic valuation. Okay, and we have done Boeing before. It's a undervalued stock. It's a undervalued business right now. Okay, and what do I like? I like undervalued businesses as a investor. Right? I love them. Why? Because as a investor, I want to buy businesses at discounts. I'm not interested in chasing this. I don't want that. Even though, granted that yesterday we got lucky with this trade, remember, this is not a everyday occurrence. What we want as a investor, not a trader, I said investor, okay, is a long-term trade from a good company that will be able to sustain its cash flows, okay? And that's where Boeing falls into this picture. All right. So, do the intrinsic valuation and figure out the 7-step process. Right. Number 1, is revenues increasing? And obviously, since Boeing has been hit, this is not going to be true, right? Number 2, is ROE stable? Number 3, how is operational cash flows? And then number 4, how is the management style? This is an important one for Boeing. Right when the company had crisis, the management immediately cut jobs, and what did they do? They raised debt through notes. Okay, they raised $20 billion in debt, and they turned down the US government for help. Okay, so that's commendable. Okay, then what about the economic mode? And then there are definitely two more, which I am also not very super brained to remember, but I have it here in a nice little thingy. Oh, actually 1, 2, 3, 5. Oh, there are actually 6. My bad. So revenues, ROE. Oh yeah, there's one more. Let's see what it is. I am pretty sure that I missed one important one. It's gonna be debt. Yes. What are the debt levels? So this together, and this should be 6 steps. 6 steps, right? These 6 steps will give you a good idea if the company is ready for a position trade. Okay, now once you have confirmed this first part of your analysis and you have concurred that, okay, this company is investable, then you go look at the technicals, right? And you go look at a big time frame, like a daily chart. Okay, a daily chart. You want a daily chart for this one. And you see, okay, this has dropped quite a bit, blah, 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 right? Where can this go? Drop a fib level, see what happened from the drop, right? This was the previous drop over here. Actually, yeah, this is swing high over here. You see, this is not considered swing high. This is considered swing high. So this will be the swing high over here. And that will be the swing low. Okay. Swing high, swing low. Now I'm talking about the big trend. Okay. The COVID drop. Okay. Then notice that the 50% is usually where companies will always retrace back to, okay, which we eventually did, right? We came down and then we came up here, right? And then we failed to break the 61.8. So now what do we want to do again? We've been consolidating heavy at this moment here, right? This little fib level, okay? So what we need now is either a retest of these 2 fibs or a retest of this fib, okay? It could be either one of these. So now you position yourself. So the reason why I took the $300 call is because that was close to the before crisis drop, okay? And if it makes indeed a full recovery, then this contract will have the maximum extrinsic value. Okay, let me give you an idea of why I'm picking this contract. Because the last time that Boeing was here, I bought $300 calls. And these calls were the same price that I paid for right now. They costed about $4. Okay? $4 per contract, but the only difference was this wasn't for January, this was for June. That's why they were a bit more expensive. Okay? Now, when Boeing went up to here, guess how much each one of these contracts were worth? They were worth $35. Okay? So your investment can go up by almost a fair sum. Okay, like a fair sum. So why I like these contracts is because they really gain value quickly, okay, if there is a big move up. Now, it would also make sense if you want to play a more risk-averse manner, you could go slightly ITM, okay, slightly closer to the money. You say a 300 call, you can do a 250 call or a 225 call. But remember, when you do this, you take on more risk, okay? And there will be more reward because the delta will be higher. The Greeks will probably be a bit better, right? So it kind of depends on you. What is your risk tolerance like, and how do you want to play the trade, right? And with that, that's how you can set yourself up for a position trade. Okay. I really hope this is helpful for you guys. If it is, I would really appreciate you dropping a like on this video. You know, it would be really helpful. And tell me in the chat, how many of you guys banked on the Netflix play? Thank you, Jonathan, once again for buying me coffee. I appreciate that. I'm definitely getting a coffee. I'll tag you on Instagram, man, when I buy that coffee this weekend. Remember, guys, if you donate to this channel, I really do appreciate it. Okay, I really, really do. So thank you very much for your donations and everything that you guys do, being here, etc. If you made money on the Netflix call, though, drop a couple fire emojis. I would love to hear from you guys. Okay, let's do this. Let's see, what do you guys have in the chat here? Good morning, good morning, good morning. How do you create indicators to read charts? Well, there is, on TradingView, you click on this indicators and strategies, and then add in whatever that you like. There are built-in ones, and then there are ones that you can search for as well. Sell calls. Okay, so I answered this question already. What expiry? I have January expiry, yes, for Boeing. January expiry. Abbott with the new September. Unfortunately, I don't cover tickers on the webinar days. I'm sorry. You can ask tomorrow. Make sure you guys come through for the live stream tomorrow. We'll be picking a new ticker for next week, and then and then, as I said, we're probably just gonna buy the contract right away, right? We're not even gonna wait till Monday. What we'll do is we'll come up with the ticker and then execute the trade right away. Because what we've been doing the past 2 weeks, remember with Baba and then Intel, and then the week before that also, I swear every ticker that we choose just flies on Monday. So might as well buy it. Are you playing Leaps? Yes, I am. Disney with the golden cross on a daily chart. Really? Oh yeah, you're right. That is true. It might run up. Good eye. Nice scalloping here also. Yeah, this might be another one. Another prospecting trade here. Keep your eyes on this one. Disney. I like it. I like it. I just don't like this gap on the bottom though. So if we break out, remember, you only get this one if you break out here. If you break out at 133 with good volume, then yes. Oops. Debit spreads smart for RH. I mean, possibly, if you know what you're doing, possibly. What expiry? I said January 300. What a nice heavy breakfast. So if you take a long in the money Boeing contract, may not have great returns as in an out the money. No, that's false. Your long in the money contract will have better returns than the out the money contract. But you're risking more. Can you compare buying OTM leaps on Boeing like yourself to in the money leaps? Well, with in the money leaps, what's going to happen is you will risk more money, but you will make more money. That's basically the difference, guys. Okay, that's basically the difference. What if it didn't go as planned? Then you cut the trade. You have a stop loss and you cut the trade. I literally wake up every morning in time just for your videos. Oh, that's awesome, man. Thank you, Kabir. I appreciate that. I did my Virgin option call on Facebook. Nice. How to join your live trading today? Well, if you are part of the option sync community, you need, holy shit, wow. You need to DM me, and you can see a lot of people have started DMing me. DM me, and I will send a link to you later, with the link to join the live trading call. Okay. So DM me on Discord. If you don't have Discord, if you don't have option swing, message me on Instagram, I guess, and I'll let you guys be a part of the call today, live trading call, where you can trade with me and see how I do things live. If you like it, join the mentorship course. There are going to be 2 of those throughout the course, probably over 2 weeks. Okay then. You think you guys can smash a little bit of the the likey buttons? Smashy, smashy, pleasy, pleasy. Any more questions? How do I DM you on Discord? What's your name there, Jim? No, my name is Neutral Tyrant. Neutral Tyrant is my name. This guy. Go to the members list, and my name should be under mods right here. Here. Right here. Like all these people just DM me, so just go ahead and DM me, and then I'll send the link out shortly after the stream. Shortly after market opens and management positions, I'll send the link out. Okay. Okay. Do we have more questions today? I'll stick around for like a minute or two more, so that you guys can ask me any questions that you have. Also, let's might as well go ahead and look at the pre-market here. Okay, so what happened? There was some news that was meant to come out. So GDP quarter over quarter, a little better than expected. GDP sales, corporate profits, continuing jobless claims, a bit worse than expected. So that's a wash. Today there's Lululemon, Workday, HP, Trip.com, Ulta, and Gap reporting earnings. Dollar General reported earnings. Dollar Tree reported earnings. Tiffany & Co. reported earnings. Wow. All right then. Cool, guys. Well, if there are no more questions, I'd appreciate if you smash the like button, and I'm going to get out of here. Keep this webinars as small and as tight as possible. Appreciate you guys taking your time being here. I'll see you guys tomorrow on the live stream. It's going to be a wrap of the entire week, and you can come in and throw your tickers tomorrow. I'll cover them, as well as new ticker for next week. So once again, thank you very much for the $10 donation, Jonathan. Appreciate it. You guys have a great day, and let's get this bread. Peace, guys.